from when it was changed substantially from when it was first insured, or if the insurer has lost its reinsurance treaty or is financially impaired, because the TDI would require it at that point. Liberalization clause. So on property policies, if the insurer makes any change that broadens the coverage in the policy addition during the policy period or within 60 days before the effective date without any increase in premium, these changes will automatically apply to the current policyholders without needing to be separately endorsed on the policy. So if it's good for the insured, it will automatically apply. Under property policies, death does not stop the policy, right? In the case of somebody dying, what happens is the deceased legal representative will be considered and insured under the policy, but only in regards to the property of the deceased covered at the time of the death, right? So just understand that the person dying does not stop the policy from being able to pay out. When we're talking about waiver of or change of policy provisions, these are called endorsements. Any waiver of change of policy must be in writing by the insurance company, the insurer, right? Now, the insured always has the right to take any recovered property. So if you had stolen property and they had already, insurance company had made a payout to you, you get the option of keeping the payout or taking the recovered property and returning the payout. Up to you on whichever one you want to do. Obviously, if you choose to go ahead and keep the money and there is a title in default, let's say for a recovered stolen automobile, that title would then have to be signed over to the insurance company when you're recovering that property. The mortgagee clause, understand that on the test, nothing that the insured does will impair the rights of the mortgagee, and the mortgagee has all the same rights as the insured. So if the insured forgets to do something, the mortgagee can do it, and it will still save that situation, right? So an example here, the insured borrowed money to purchase a building, then set it on fire to try and collect from the insurance, but the arson was discovered and the claim was denied, but the mortgagee is still going to get paid out what it was owed, okay? So even though it was a crime that happened, that is still going to be covered by the insurance company to the mortgagee. Loss payable clause. So